Do you want to know when the real Bitcoin holders are exiting? Real, you say. What do you mean by that? I mean the old money, the whales, the ex posts you hear about so and so transferred 500 million from this wallet to that wallet, the cold wallet crowd, so to speak. They don't post, they don't signal, but they do move coins when it matters, and you should know about it. And we're going to be talking about the VDD multiple today. It picks that up before you even hear a whisper. Let's talk about the indicator that separates conviction from quiet distribution. We'll start off with what the hell it means. What is the VDD multiple? It stands for value days destroyed. It tracks the movement of old high value Bitcoin. It multiplies each UTXO's value by its age and then compares that to the 365-day average. Let me give you an example. If someone spends one Bitcoin that's been untouched for 10 years, that's 3,650 value days destroyed. Multiply that by thousands and you get signal. The VDD multiple basically helps us understand when significant amounts of dormant Bitcoin are moving and whether it's happening more than usual. It's not about volume. It's about value with memory. And it's not perfect either. We're going to get into sort of the cases where this thing kind of falls and breaks apart. It's not meant to be used as a solo indicator. It's meant to be a complement. So let's talk a little bit about why it matters. And I'll pull up the check on chain version, which I really like because it actually shows you the hot zones on the price chart itself. And let's be clear about this because most bull markets don't top because of overbought RSI or bad vibes or anything like that. They top because long-term holders start quietly unloading their coins. And this metric captures that. A spike means old coins are being spent at a rate above the annual average. It's not short-term trading noise. It's whales rotating out. Historically, when the V multiple pushes towards 2.9, you're close to a top. And you can see that illustrated on this chart pretty perfectly. As I said, this is not the perfect indicator. It has to be used with other things in mind, macro context, other on-chain metrics, but it gives you a good idea of when things are really overheated. When it dips below 0.5, it's a signal that long-term holders aren't moving their coins, which has historically been a green light to DCA, but only at the end of a bear market or during early bull phases, right? The context matters here. So you can't use this by itself. Same thing for the upside. On August 2017, VDD multiple hit its all-time peak for that cycle, yet price went up another 3x. So you have to use this, again, within context. By itself, it's not perfect. But let's talk about how to actually use it. Have to look at this as a macro sentiment gauge for Bitcoin's most powerful wallets. And that's the important thing to note here. This just tracks the movements of historically old, untouched Bitcoin. So above 2, and actually 2.9 is the real signal. That is what the author suggested as a sort of quote unquote top or peak. That's overheated. So that means you're pretty close. You're closer than you think. Sometimes it does nail the top, right? In December 2017, this was the top for that cycle, but it had flashed before and then reset. And if you sold here on the first one, you would have missed a, almost 5x run up, 4x run up. Around 1, that's pretty much normal. 1 to 2 is pretty much normal. Below 0.5, that's accumulation with an asterisk sometimes. This is where nuance matters. In a bull market or a bear market bottom, this is where the smart money is basically stepping in. But in mid-bear cycles, this can be a trap just like it was in 2018. What about the current reading, right? Where are we now? It's July 19th. Bitcoin is near all-time highs. We're sitting at about 117, 118,000. And the V multiple has spiked. We are above 2. We're currently at 2.27. So what does this tell us? It tells us that the rally is hot and it's got legs. We're not in euphoria, but we're definitely warm. Some long-term holders are beginning to unload and move coins. It's not a sell signal yet, but it's basically telling you need to have some sort of plan. If this starts trending towards 2.9, start watching for the exits. If it dips under 0.5 and we're mid-bull, get greedy and stack more if you can. If it dips under 0.5 and we're mid-bear, don't get overly optimistic. That really could be a trap. So you need to layer this and use it with other indicators. If you haven't seen my Bitcoin macro war room episodes, definitely give those a look, because I try and put all of these things together into one powerful system that basically just answers the question, should we be risk on or should we be risk off? So the final take for this indicator, this won't time the top for you, but it will tell you when the big money starts positioning for one. Pair it with things like the SOPR, right? Are they locking in profit? Pair it with macro regime data, right? Is liquidity backing this move? Pair it with dominance, Bitcoin dominance. Is the market currently rotating into alts? The real edge here is catching the inflection, right? And especially during bull market phases, if this does dip, like let's say, for example, here when we hit 60K, VDD multiple went, under 0.75. This was a great place to add to your bags if you had extra capital. So the top won't announce itself, right? But the old wallets will. You just have to be watching the right metric and pairing it with complementary indicators. VDD doesn't really care about your thesis or anything else. It just shows you what the whales are doing. If you enjoyed this video, I really hope it helped you out. And if you can, give me a subscribe. It would really help my tiny, minuscule, insignificant channel. I really appreciate you taking the time out to go through this with me. We'll see you for the next on-chain indicator. And as always, thanks for watching.